Alright, so let's talk about something I see all the time. It's a story that plays out every single day in the world of crypto. Picture this, it's late 2024 and everyone is talking about Bitcoin. Your friends, your family, that one coworker who suddenly seems like a genius. You finally decide you can't miss out any longer. The fear of missing out, or FOMO, is real, and it hits you hard. You download a crypto app, link your bank account, and transfer a few $1,000s, ready to become the next crypto millionaire. The price is soaring and you feel like you're on top of the world. The first few days are pure magic. You check your phone every 5 minutes, watching your investment climb higher and higher. You start doing the math, calculating how soon you can quit your job and buy a Lamborghini. It feels so easy, almost too easy. You tell yourself that you're a natural, a trading prodigy who just needed a chance to shine. But then, it happens. Seemingly out of nowhere, the market takes a nosedive. That beautiful green line on the chart turns into a terrifying plunging red waterfall. Your heart sinks into your stomach as you watch your gains, and then some of your initial investment vanish in a matter of hours. This is the exact moment where the panic starts to set in. The excitement is gone, replaced by a cold, nagging dread. You start reading headlines about a market crash. The same people who were cheering for crypto are now predicting its doom. Every little dip feels like the beginning of the end. You can't sleep, you can't focus on work, and all you can think about is the money you're losing. You're glued to the charts, feeling a wave of anxiety with every flicker of the price. This is the crypto roller coaster, and you've just experienced your first major drop. You feel completely overwhelmed and start to question if you made a massive, life-altering mistake. The experience is exhausting, both mentally and emotionally. You went from feeling like a financial wizard to feeling like a complete fool in less than a week. The dream of quick riches has turned into a nightmare of potential losses. So, what happens when you're caught in that emotional storm? You make mistakes, big ones. The most common and most destructive mistake is buying high and selling low. It sounds completely backward, right? Why would anyone do that? Well, it all comes down to those two powerful emotions, greed and fear. Greed is what pulls you in when the prices are skyrocketing. You see everyone else making money, and the FOMO becomes so intense that you throw your cash in at the peak, afraid of missing out on even more gains. You're not investing based on a plan, you're chasing a trend, and you're usually the last one to the party. Then, just as quickly, fear takes over when the market turns. When the price starts to crash, the logical part of your brain shuts down. All you can see is your money disappearing. The panic is overwhelming. Your instinct screams at you to get out, to sell everything before it goes to zero. So you sell. You lock in your losses, telling yourself it's better than losing everything. You bought at the top because of greed, and you sold at the bottom because of fear. You have just perfectly executed the worst possible investment strategy, and unfortunately, it feels like the right thing to do in the moment. This is the emotional trap that drains the accounts of countless new investors. This cycle can repeat itself over and over again. Trying to perfectly time the market, buying at the absolute bottom and selling at the absolute top is nearly impossible, even for professional traders with sophisticated tools and decades of experience. For the average person, it's a recipe for disaster. It turns investing into a high-stress gambling game where the odds are stacked against you. You end up financially and emotionally drained, with less money than you started with, and a deep-seated fear of investing. So, if trying to time the market is a losing game, what's the alternative? How do you invest in something as volatile as crypto without losing your mind and your money? The answer is beautifully simple: dollar cost averaging, or DCA. Forget the complex charts, forget the scary headlines, and forget trying to predict the future. DCA is a strategy where you invest a fixed amount of money at regular intervals, no matter what the price is doing. It could be $50 every Friday, $200 on the first of every month, or any amount and schedule that works for you. The key is consistency. You set it, and you forget it. Think of it like putting your investment strategy on autopilot. Instead of making one large, lump sum investment when you think the price is right, you break that investment up into smaller, manageable chunks. When the price of Bitcoin is high, your fixed dollar amount buys you fewer coins. But when the price drops, that same fixed amount buys you more coins. Over time, this approach automatically helps you buy more assets when they are cheap and fewer when they are expensive. It completely removes the guesswork and the emotion from the buying process, which is where most people go wrong. The beauty of DCA is that it smooths out your average purchase price over the long term. You're no longer worried about whether today is the perfect day to buy. In fact, when you're using a DCA strategy, a market dip is actually a good thing. It becomes a discount opportunity, a chance for your regular investment to scoop up more crypto at a lower price, bringing your average cost down. This simple shift in perspective is a game changer. It transforms fear into opportunity and allows you to look at a red market with a sense of calm, knowing your strategy is working exactly as it should be. This method takes the stress out of the equation. You don't have to be a financial genius or a market analyst to succeed with DCA. You just need discipline and patience. Most cryptocurrency exchanges and brokerage apps even allow you to set up recurring buys automatically. To really see the power of DCA, let's look at a simple example. Let's imagine two investors, Tim the Timer and Daisy the DCA-er. Both have $1,200 to invest in a new cryptocurrency over 6 months. Tim, believing he's smarter than the market, decides to wait for the perfect moment to invest all his money at once. Daisy, on the other hand, sets up a simple DCA plan to invest $200 on the first of every month, no matter what. Let's say the price of the crypto fluctuates wildly. Month 1 it's $10, month 2 it's $5, month 3 it's $2, month 4 it's $8, month 5 it's $12, and month 6 it's $15. Tim the Timer watches the price drop from 10 to 5 and then to 2. He gets scared and doesn't buy. Then it starts to recover. He sees it jump to 8 and then to 12 and the FOMO kicks in hard. He finally decides to pull the trigger and invests his entire $1,200 at the month 5 price of $12 per coin. He gets exactly 100 coins for his money. Now let's look at Daisy. In month 1, her $200 buys 20 coins at $10. In month 2, it buys 40 coins at $5. In month 3, it buys a whopping 100 coins at the low price of $2. In month 4, it gets her 25 coins at $8. In month 5, 16.67 coins at $12. And in month 6, 13.33 coins at $15. At the end of the 6 months, Daisy has invested the same $1,200 as Tim, but let's add up her coins. She has accumulated a total of 215 coins, 20 plus 40 plus 100 plus 25, plus 16.67 plus 13.33. Tim the Timer, who tried to be clever, has only 100 coins. Daisy has more than double the amount of crypto for the exact same investment. Her average cost per coin is just $5.58, while Tim's average cost is $12. Daisy didn't need to predict anything, she just needed to be consistent. She bought through the highs and the lows, and her discipline paid off enormously by lowering her average cost basis. This simple story shows why DCA is such a powerful strategy for building wealth over the long term, especially in volatile markets like cryptocurrency. It removes the two biggest obstacles to success: emotional decision-making and the impossible task of market timing. By committing to a consistent plan, you can turn market volatility from your worst enemy into your greatest ally. You invest with confidence, knowing that you have a sound strategy that doesn't depend on luck or genius predictions. You can sleep soundly at night, free from the stress and anxiety that plagues market timers, and watch your investments grow with patience and peace of mind.